Hey guys, welcome back to another video. In this video, we'll be going over an in-depth look at taking entries on lower time frames. But just before we get into the video, make sure to subscribe, give this video a like, and join my free Discord server if you haven't already. Links are in the description below. When taking lower time frame entries, we ideally want price to be trending in a certain direction. This is because taking entries on the lower time frames relies on the higher time frame being in your direction. Once we have this, then we can have more confidence in lower time frame structure breaks, as they are the key to taking entries on the lower time frame. Throughout this video, I will be dropping key gems that I think you guys should know when trying to take entries on the lower time frames. So make sure that you watch the video in its entirety. So let's get into two theoretical examples of what to look for in order to take a lower time frame entry. So theoretical example 1. As you'll see, this area here represents a POI that we are interested in. And by interested in, I mean, let's say taking a short trade from. And we want to use the lower time frames to take this trade. So the first thing that we need is we need price to be moving towards the POI in a certain manner. And the certain manner that we want it to move towards the POI in has to be structural. And so as a visual representation of this is like something like this. So price needs to be moving towards the POI like this. And when price moves into it, we start to look for certain things. And these certain things I will talk about now. So the first thing is price needs to make some sort of structure within the POI. If it just goes in and then out, that's not going to help us. Sometimes price will break through the POI and close above. When this does happen, it is very vital that price returns straight away in a couple of candles. Ideally, one candle closes out of the POI, the next candle closes back in, and that we can count as a fake out. When this happens, we need more structure to be created. And then ideally price comes down and then it will drop out. The key thing here is we want to denominate a low, and a low that has to be significant. So let's say this one over here. It doesn't have to be outside the POI, it can be inside as well. But the key thing about this low here is it has to be a 3-minute or 5-minute significant low. And what makes it significant is it leads to a higher high. And that's what has to happen. Essentially, the low that leads to a higher high has to be on either the 3-minute time frame or the 5-minute time frame. Obviously, the higher the time frame, the more significant the low will be and the more trustworthy it is. But these are the two time frames we need it to be significant on. Next, when price moves up into the POI and let's say it does a fake out, comes back in, we don't want to be taking trades at these points here. So like trying to take it from here or here because we haven't broken the significant low yet. So we need that break of that significant low. And then once it's broken at this point here, we can expect to take a trade at this point. And that's when we look for shorts at this point here as denoted by the second POI. And then we can look to take a trade. Now with taking trades with lower time frames, we need to understand that the location within the POI of taking the trade does not matter. What does matter is ensuring that price has confirmed it's ready to reverse and continue along with the higher time frame trend. And so we look for the safest confirmation of taking this trade. And this is an example that we have actually seen before. And if I just move to the right a bit or a bit down, move this away, it coincides with our entry drill, right? So price comes up, breaks a low, comes back up again, and then there's your entry trade. And then this is the breaker structure, obviously. And this high over here is where we take the short trade from, like so. And this is something that we've seen before. Now, in the second example that I'm going to go over now, we're going to go over something that we haven't seen before. Or you probably have, but you just don't know it yet. So sometimes when price enters a POI, it won't give us the textbook pattern, if you will, that we look for all the time. Sometimes price just breaks down and breaks down and breaks down, and that breaking down gives us an idea where price wants to go. And what I mean by this is price does this. Now this is actually an entry pattern that we can use. We want to be entering a trade here, and I think that gives you an idea of how we use this trade. But let's break it down. So here's a significant low that we require, the break of, right? And that doesn't get broken, but what price does do is start breaking down on the lower time frames, but we get multiple breaks. And ideally we want these on the 3-minute or the 5-minute. The 1-minute only take this trade if the significant low is broken first. But if we get this, we can happily take a trade from this area. Again, it has to be within a higher time frame POI that we are looking for reversal from. So that's that one there. then we can take a trade from here, and we will be quite confident along with the higher time frame bias to take that nice short. One worry that people have is, won't this be liquidity? And the reason is very simple. No, it is order flow. Order flow does become liquidity, but if price is in a POI and it wants to reverse, then we have confidence to take it to the downside, especially since we get breaks of structure indicating so. Now let's go over the case study that we will be learning from. So as we can see, price was moving up over here on EURUSD, and then it starts to move down. And when it moves down, we do get some breaks of structure that I will highlight. So this one here, and we get this small one over here as well. And if we move into this area and zoom in a little bit, let's see what we can see. So price moves down, we've got this supply area here, pulls away, comes back up. And let's focus on what happens within this supply area. So that's my higher time frame POI that I'm going to use. Let's extend it to the right, drop down to like the 50-minute time frame. And as we can see, we do get reaction, but we want to see the reaction on the lower time frames. So let's go to the 5-minute. So on the 5-minute time frame, we can see we can essentially refine that POI down to this one over here. And we see that price comes in with structure as we wanted it to, and it comes and taps into this POI. It then begins to break down as so. Now, like I mentioned in the second example, that we could have taken a trade from any of these with stops obviously above this area, and we would be happy to take that trade. So let's go ahead and do that. So what we can see is we tap in, we break down, and we get the first break of structure here. We come down again, we pull up, we get the second one there. Obviously this one doesn't break it with the low, but I think on the 1 minute it does. And then what we can do is we can take this straight away as our OB to sell from, and we enter the trade here. Our stop will be just above this high, so 7.4, let's make that like 8, so we're giving it about 0.6, and then we get to see our trade run. And then let's say we have a standard target of a 1 to 5. As you can see, that 1 to 5 is given to us very nicely, and obviously we could extend it down to here. Now don't let this fool you. We generally won't have the full position running for 12R, but we can have some sort of partial running to that area. And that is case study number 1. So let's have a look at another example. Now this example is roughly the same area. So this was the move we took down in example case study 1. And in case study 2, this is the move we're going to look to take. And let's see how we would have gotten to take this move. So first things first, price comes down, breaks the low. We expect a continuation to the downside at this point on the 1 hour time frame, and then we highlight an order block, and that's obviously going to be this one here. We move it to the right, and now let's drop down to the 5 minute to see what happens in this area. Straight away, what we can see is we have structure moving towards this area, which is exactly what we want, and we also have a significant low on the 5 minute time frame. It would obviously be a significant low on the 3 minute as well. So let's just put this to the right, and as we can see, price taps into the order block, creates some sort of relative equals, and then moves up. Now, we can't actually get in here. Well, we can because we get those multiple breakdowns, so we could have gotten in there. But we can go with the theoretical example number 1 that we went over, where we look for an order block after price breaks significant structure, which is this one here. So now let's turn this to a BOS, and let's highlight the order block we can take the trade from. And it will be this one over here. And as you can see, very simply, we will be entering at this point. Stops will be above this high to be safe, but can be above here as well. But let's just go with above the high because we want to be safe. 8.6, let's make that about 9.1. Let's give it 0.5 pips breathing room for spread. And then we can target the lows. So generally, let's say that's going to be a 1 to 5 as a quick example. But also we can target the low here as well with runners and partials. And as you can see, from both of the examples that we've gone over, theoretically, we've applied them to the charts and we have gotten nice, almost sniper entries on the lower time frame. If you've made it this far in the video, well done. I've given you as much golden gems and nuggets as I possibly can. And this marks the end of the video. So thank you for watching. Make sure to subscribe, give this video a like, follow me on my socials. The links are in the description below, and I'll see you guys in the next video.